Please subscribe to my YouTube channel for more videos in financial accounting and on further topics as well. So this video is actually on depreciation actually. So there are about two main methods that we talk about in financial accounting, the main ones most of the time. Straight line method, so let me just write that. Okay, straight line method, which they would call also fixed installment method. So these are just other names you have to be well conversant with, as you know you're dealing with either straight line or fixed installment. So straight line method has actually a formula which states that it's cost minus what, scrap, or what they would call residual value, then the whole thing over what, number of years. That's the formula for us is straight line method. So usually what happens is that the details will guide you to know that, okay, I'm using the formula method. Okay, maybe you hear they're talking about number of years, it's residual value in the question, then you know you're going to calculate the depreciation using this method, this formula, sorry, and the straight line, and they'll even specify, okay, to use straight line method. But you can imagine they might maybe say straight line method and maybe they've just given you what, a percentage. How do you go about such a question? So whenever you're given a percentage, remember this, we always charge percentage on what, on costs. Just remember that if you're given a percentage and they are stating straight line method, it's always on costs. How about this other method, reducing balance method? It also has another name, reducing balance method, also known as diminishing balance method. So they might interchange all these words, so it's up to you now to get to understand them well. Diminishing balance method. So this one has got an approach on how you would calculate depreciation of a current year of a certain period in time, okay, using reducing or diminishing method. So in that scenario, what you're going to do is that, okay, when you have been told that use reducing balance method, it's cost minus accumulated dip, I'll abbreviate accumulated dip depreciation. They will state this part is always in the trial balance, the accumulated depreciation, over, sometimes it might not be there, but that's why you would normally find it. So you're not even actually over, so it's cost minus accumulated depreciation. The answer that you get, let me just say, equals to a certain answer. On that answer, then you multiply it what, with the given percentage. They always state a certain percentage that, okay, reducing balance method at maybe 30%. So it will be that percentage that you multiply now on the answer that you get after cost minus dip, and then the percentage when you charge it, that will be the depreciation charge for the year, which we record where, in the statement of profit or loss. Just remember that when you ask to calculate depreciation charges, those ones they give in the additional information, those are just for the year, charge for the year, and they're put under expenses in the statement of profit or loss. So having done that part, there is always that part in your balance sheet. Hope you're familiar with those three columns in the balance sheet: costs, dip, and NBV, net book value, right? So when you're like in your depreciation column there, what happens is that you're now trying to record the overall dip as of now, you know, as of that last date. So the balance sheet is like as at, you know, as of that final date. So what happens is, what we record in this depreciation column, having calculated the charges and recorded them in the profit and loss. So that charge for the year you got, right, it's going to be here. I'll just abbreviate it and say, okay, that's charge for the year, right, plus the accumulated dip. If it's there in the trial balance, you add them together. Take note of this. This is what you record in this depreciation column. When you reach the balance sheet now, you get the charge for the year, the one you recorded under expenses, then come and add it on to the accumulated dip for that, of course, for the same particular asset, if it was there in the trial balance. That's what you do in this column. And then that's it. NBV is of course just your cost minus your dip. And that's how you handle depreciation in your statements, okay, of profit or loss and your balance sheets.